Okay, so good evening, good afternoon, good morning, everybody, and welcome to today's webinar with FX Street. I hope you've all had a good week in the markets and you're ready for a lovely weekend. In today's webinar, we're going to talk about support and resistance, but we're going to do it a little bit differently. So we're not going to really pay attention to the slides or anything like that. We're going to go directly to the charts, okay? And we're going to talk about, one, how you identify support and resistance, and two, and probably more importantly, how you go about trading support and resistance. Because really and truly, I've had a lot of questions from our members over the years and everything. And the one thing that I notice is that people approach support and resistance blindly. So it's sort of a case where once you've got the support and resistance level on the chart, you just trade it regardless of what it looks like, regardless of what the price action is. If the price approaches a support and resistance, then you'll just take a trade. And I've also noticed that people are quite stringent in the way that they trade support and resistance, i.e., they either will trade a breakout of support and resistance or they'll trade a bounce. It's one or the other, rather than taking an approach to say something is going to happen at this level. Okay, and depending on what the price action is, depending on what the market shows me, I'm going to trade this a particular way. Okay, does that make sense? So what we're going to do in this webinar here is, first of all, learn, or I'll teach you how to identify them. Okay, we'll talk a little bit about the way that you can trade them on the different time frames. And then we're also going to talk about what sorts of price action you're looking at from a support and resistance level in order to get the best out of your trade and to be able to take the highest probability setups, right? Because that's what trading's all about. It's about taking setups that are going to make you money more often than not. So, a little bit about myself. For those of you that don't know me, my name's Alex Ong. I'm the co-founder of a website called Traders Corner. I run that with my brother. I've been trading the markets since about 2005, although to be honest with you, I've actually been involved in the markets for significantly longer than that, in the sense that my entire family, on my Chinese side, anyway, trade or invest in one way or another. So I come from a long line of investors. My grandfather and grandmother invested and traded in sort of like the 70s and 80s. And then my uncles and my father picked up the baton in the 90s, in sort of 2000. And now my brother and myself are doing exactly the same thing. We consult for a private investor fund in Europe. We've co-authored many articles for FX Street, among others, and obviously other strategy manuals, that sort of a thing. If you want to find us on Facebook, it's www.facebook.com/Traders Corner Online. And on Twitter, we can be found at AlexOngUK. And that's my personal Twitter handle. So if you want to see what my thoughts are on the markets, if you want to see what it's generally what I'm thinking about, a scary place at times, then you can go and follow me on Twitter. So now that we have all of that stuff out of the way, we just need a quick disclaimer just to say that the contents of this webinar is not investment advice. Okay, so we are going to be looking at live charts. We're going to be looking at potential setups. All of it is just my opinion only. It's not investment advice. I'm not authorized or regulated to give investment advice. So you still need to do your own due diligence. You still need to do your own research and decide if trades are right for you or not. And in some cases, if you need to consult an independent financial advisor. Okay. Now that we have all of that stuff out of the way, let's go and take a look at the charts. So first of all, what is support and resistance? In its most basic form, what's support and resistance? Morning, Pan on Fire. Anyone want to offer up an explanation or a definition? Or shall I just jump right in there? Exactly, Pan on Fire. So it's ultimately, it's a barrier, it's a wall. So from a resistance perspective, it's a ceiling that price gets to and it can go no further. From a support perspective, it's the floor from which price is going to bounce from or potentially break through. But ultimately, support and resistance are areas on the charts where we're expecting something to happen because we've seen it occur in the past. Okay, support is a level where the price may be falling down, so falling off a cliff. maybe trending downwards, and it's an area where the market gets to, and it finds it difficult to go any further. So it may bounce from that level, or it may just go sideways. But ultimately, it's a barrier, as Pan Fire just said, where price can go no further. A resistance level is a level where price is trending upwards and it finds like a ceiling, so it can't get through it, and then it retraces its previous move. One important concept to understand, and one of the great things about support and resistance, is that a support level can become a resistance level, and a resistance level can become a support level. So for example, taking a look at this level here on the charts, okay, this level here on the pound New Zealand, I don't know if you can see it here. On the one hand, that is a support level, but in the future, when price breaks through there, and you can see it sort of on a tiny scale there, it also provides a level where the market is going to bounce from. Okay, it could provide resistance. So on the one hand, it's support. If the market breaks through support, then comes back to that level, it then can act as a resistance level. And you see this happen over and over and over and over again. Now, how you guys look for EU? How you guys look for EU? For the euro dollar you're talking about? We'll take a look at that in a second. So the important thing to understand here is that a support and resistance level for us is just an area where we expect something to happen with the price, okay? It could be that the price breaks through it. It could be that the price bounces off of it. And there are certain things that we look at to indicate what the price is going to do. So what I don't want you guys to do as traders, okay, is say, well, I'm just a breakout trader. All I look for are breakouts, and if there are no breakouts, then I won't take a trade. And you know the reason that that's a problem is ultimately what's the word for it? You're kind of putting a straitjacket on yourself. Okay, so whereas if you were to say, if I'm just going to see what price does when it gets to this level, you're opening yourself up for so many other opportunities. If you're just looking for breakouts, then one, you aren't going to get as many opportunities, but two, you're probably going to make up opportunities even if they don't exist, because you aren't going to have as many. So you'll be like, well, that kind of looks like a breakout, so maybe I could trade that, rather than saying, I'm just going to trade the price action on the charts. I'm going to identify key areas, big levels where I expect something to happen, and when price gets to that level, I'm going to take a trade. So if it breaks through, I'm going to take a breakout trade. If it bounces off of it, I'm going to take a bounce. And there are various ways that you can get into or out of trades based on that. Who here trades support and resistance already, or who incorporates it into their trading at this particular moment in time? Here you do. Excellent, Michael. Of course. And who here will only trade a breakout of support and resistance, or only trade a bounce off of support and resistance? Both depending on the bias. Excellent. Is there anyone here that will only do one or the other? You try to do both, but don't always work. I guess if it doesn't always work, you're probably one of those people that you kind of get caught up in the moment. So one time you're buying, then you're selling, then you're buying, then you're selling, and it just does more harm than good to your account, perhaps. So, excellent. So I've got an idea as to what people are looking at. So how do we go about identifying support and resistance, and how do we trade it? Well, me personally, I will identify support and primarily from the daily chart, okay, or the weekly chart. So I'm looking for big levels. When you're identifying a support and resistance level, you're not looking for these tiny little levels that nothing is going on at in the charts. You're looking for levels where price has had a reaction, all right? So, for example, some people might term this here as a resistance level. People put that on their chart and say, well, that's a resistance level. That, for me, means nothing. That's just price action. The market is going back and forward, and that's all it's doing. The best way to identify support and resistance levels is to really zoom out of your charts. So you're kind of hiding all of that tiny price action in between, and you're only looking for the biggest level. So looking at this chart here, we'll go and identify the levels. Looking at this chart, I'm looking at that level there. That's a big level that price has come to, and it's reacted to it. Okay, that's a big level. Over here, again, that's a big level. We could put in this level here as a support level as well, because there's a big reaction to that level. It looks close together, but it's actually 100 or so pips apart. Over here, that's a level that price has clearly come down to, and it's been sold off from it. Over here, okay, so let's zoom out of our charts. Let's come back a little bit, and we want to see how it reacts in the future, okay? So as if we were at this part in our charts here, we would say that that's a resistance level, that's a level we'd want to pay attention to, and so is that. Okay, so we've identified it here. Then let's see how price reacts to these levels. Once you identify them, how they come and react to the levels. Now, the important thing to understand about support and resistance level, and particularly the FX market, is we're not looking for pip perfect touches. We're looking for the reaction to the level. So we've identified this level here, all right? We identified this level in the past. What we would then be looking for the next time the price approached this level, so we're there on the 23rd of November 2011. The market goes away from that level. We've identified this level here, the support level here. Do we trade as soon as the price gets to that level? No, we wait to see what the price is going to do. So the price comes down to this level, it meanders from it, and then it breaks down. Okay? From this perspective here, you probably would have been stopped out once or twice, in all honesty. I wouldn't have traded this initial one here, but when it broke back above, I would have been in on that trade there, and I would have been stopped out here. All right? But there's nothing you can do about those moments there. Next time price broke back up above that level, because it failed to get below here and hold below here, I would have been in again. I would have made my money back and then some. But we're looking for the big level. So the next time the price gets to this level here, right, this big level where we can see a big reaction. So the reaction that we're looking for is we're looking for price to be trending up towards a level, not meandering, but really going up to it in a big way, then to be sold off from that level. The next time price gets up to that level, we want to look at the price action. So I want to see price stall at a level. I'm not going to trade it just because it gets up there. I want to see something happen. And it might be that you need to break down into a lower time frame to see that. But ultimately, I want to see the price attempt to get beyond that level and fail, which is exactly what happens here. The price attempts to get beyond that level, it fails. And then I would be in here somewhere around this level at 2.0607 with a stop above, and then potentially looking for the market to go down to the 1.98 level. So you've got a massive risk reward trade on the table there. No indicators, just pure support and resistance, and looking for reactions to the level. All right, so that's a big level. We've identified this level here, back here in the past. Next time the price gets to that level, we want to see something happen. So again, previous support becomes resistance. So which one was this level here? Previous support there. Next time the price gets to that level, if it fails, so we're not trading initially when the price gets to the level. We want to see the reaction. We want to see some sort of stalling price action at the level. Next time support becomes resistance, price trends down. Very nice. It gets down to this level here and it bounces off of it. Now, I'm probably teaching a lot of you guys to suck eggs because you've seen this a million times before, right? You know that it happens. Am I correct? So what's the problem? If you know that it happens, why can't you make money from it? And my guess is that you're probably trading the levels blindly. So for example, you're waiting for the market to come up to this level. It would have worked out here, but as soon as the market gets to that level, you sell. That's not what you want to do. You want to see a reaction. So looking at this market here, now that the market's at this level, I wouldn't be selling as soon as see if we can get some. I wouldn't be selling as soon as the market gets up to this level here just because it's at that level. I'd wait for the price to react to that level and then break a previous level of support. So once the price has got up there, on the close of this candle here, and then they break below the lows sort of there. That's where I would be looking to enter. I'd have my stop above the highs there. And initially, I'll be looking for a profit target somewhere around there. So we've got a nice 1-to-1. And if we get beyond that level, then we can look at the next support level, which is this one over here. So you kind of got 1 or 2-to-1 on that particular trade there. Okay, simply, your stops take you out. Lovely. Simply by looking at the reaction to the level. Remember, you're looking for a bounce from that level. Okay, or you're looking for the market to break out from it. You don't want the market to meander at that level. Again, the market breaks through that level, comes up to this level. What happens when the market breaks through a level? You're looking for momentum, right? So the way that we would trade this is if we traded the initial break there, we'd have our stop somewhere down here. If the market failed to get above it, we'd have our stops at break even by that point. And by the time the market turned around, we would then be back out again. And we would be trading the failure from that level. And to be honest with you, the failure of a support and resistance level is a much higher probability trade than the breakout from it. If you have to pick one, I wouldn't recommend it. But if you have to pick one level, you'd more be looking to trade the failures rather than the breakouts. Now, I know that that's sort of difficult because new traders are always told the easiest trade is to take a breakout. And it kind of is the easiest to see on the chart. But in reality, they're the lower probability ones. The higher probability ones, okay, are the failures to break out from a level. So when it gets up above this level here, it fails, and then it breaks back down. That's a huge indication that the market doesn't want to be higher. Okay, the market doesn't want to be up here because if it did, once the market broke out of that level there should be a couple of things. One, there should be a lot of stop orders, which should push the market out here with momentum. But two, and more importantly, you should have big orders over here to buy at that level, which would push it out with momentum all the way up here. If that doesn't happen, if the market gets above a significant resistance level and fails to trade through it with momentum, you don't want to be in that trade. It's as simple as that. You do not want to be there. It doesn't make any sense whatsoever. All right? The markets are always giving you clues. Is it going to be 100%? Absolutely not. But if you're willing to take a step back, all right, from the strategy that you're trading and saying, actually, I want to look at the clues that the market's giving me. Okay, hold on, let's just... Yeah, I want to look at the clues that the market's giving me. I want to trade according to what I see, not on what I think or not on what I want to happen, right? Then you're going to start to make a lot more money. How do you identify big orders? Momentum. AT. If you start seeing momentum on the charts, then you will see that. Then you'll know that there are big orders there. If you don't see the momentum on the chart there and it starts to break back down, there still could be big orders, but in the opposite direction. And that's what we're talking about. We're talking about identifying where the big money is. The big money is going to be in the direction that's controlling that particular trade. So if it gets out above a particular resistance level and fails to go any higher, okay, and then starts to break back down below, that's a good indication that the big money wants the market to go lower. Because if the big money wanted the market to go higher, at this point in time there, as soon as the market breaks through that level, that's their opportunity. That's their opportunity to get in on the trade, if they weren't already in on this trade here. But more often than not, what happens is the big money's been in here. The big money's been in this trend move here. They don't really think the market's going to go much higher, so they'll use all of the liquidity here as an opportunity to get out of their trade. You know, the breakouts are where the rookies are for the most part. And it's where the uninformed traders are, because they will be buying this breakout here. And guess who they will be buying off of? They'll be buying off of all of the professionals that were making money during this upwards move here. So they're making money here, 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 here. They get up to this resistance level there. They say, you know what? It's a decent level to take our profits from. So therefore, we're going to sell when we get up to these levels. And who are we going to sell to? We're going to sell to the uninformed trader. So the losing trader. So the trader that wants to trade the breakout of this level here, even though there's no real reason to do that. And then what they'll do is that they'll then get involved in the failed breakout. They'll then start selling down here and cause the market to go lower. Okay? So you can see it all over the charts. The levels that we identify back here, they come into play over and over and over again. Look at the approach to the level. And that's what you're interested in, by the way. When you're trading a support or resistance level, you're interested in the price action approaching the level as well. You don't want meandering price action. Okay, you don't want the price action just kind of going a little bit up towards the level, but not doing much. You want strong trending price action. Because then you know if there's some sort of a pause at a level, that's real. The market's actually taking notice of it. If you've got meandering, slow price action that's kind of coming up to a level, but not doing so much. Okay, it's not going up to it with momentum. How can you tell the difference between a genuine pause in the price, between genuine sellers or profit taking, and just the market continuing to range up towards a level? You can't. And as traders, it's our jobs to do our best to identify the high probabilities on the chart. Where do we think something is going to happen? Okay? Where do we know with a high degree of accuracy that something will occur at a particular level on a chart? Right? So we have to identify those areas, and it's more than just identifying the level. It's also about identifying the price action that precedes the approach to that level. Does that make sense? How far back do I look for support in? It's not necessarily the age, it's the reaction to the level, Michael. So it might just be a year old, but if we get a huge reaction, I'm still going to take note of it. Yes, higher time frames are of course more important than the lower time frames. So move on. Zoom out. So we've got this big one here. What happens? Look at how huge that level is. Okay, this is only a couple of years old, but look at the reaction to that level. So the next time price gets up to that level, what do we think is going to happen? It's going to reject it, right? And what happens? We get nice trending price action. This is what you need to be taking notice of. This upwards move here to approach that level. That's what we care about. If the market did this up to the level, yeah, the market did that, we wouldn't really know what was going on if it's sort of range bound all the way up to this level. The fact that this is almost a vertical straight line up to that level, if it provides a barrier, we know what's going to happen. We can tell. Does that make sense? Yeah? So you're looking for price to be trending up to a level. It's so very important to look at that. You don't want it doing that, because you don't know what's happening when the market gets to that level. You want a nice upwards trending move. You want momentum in the market, because it's much easier to see the failure of that momentum. Or if we go and take a look here, or you get the breakout of it. Where were we? Momentum move. A big candle there. Now, obviously, it did turn around a little bit, but you can see that you've got momentum there. Then eventually you get a big gap up. And what's great about support and resistance is it works on all levels. You can identify support and resistance levels on a daily chart, and you can trade it on a 1 hour chart. So looking at this level here, 2, 3, 4, where are we? This level up here, 2330, or this resistance level there. Put that level on the chart, you'll see over and over again, the market comes up to that level, bounces from it. Comes up to that level, bounces from it. So you don't just have to wait for the dailies to come up there. I know that might get a little bit boring, but if you identify the big levels and then you trade the reaction from a shorter term time frame perspective, you're going to make money. There's no two ways about it. Small reactions to big levels. Small reactions to big levels. If you can think about that, if you can keep that in your mind, you're going to put yourself in a great position to make money. So this is that same level there. Market comes up to it. You can see, you wouldn't possibly see this on the daily, but on the hour, you can see that the market comes up to this level. That's an opportunity to sell. This is another opportunity to sell. You probably would have been stopped out on that one, but c'est la vie. Another opportunity to sell. The market breaks out above that level, and you can see on the 1 hour time frame, huge red candles there, bearish candles. You want to be selling around that point. You can even sell this here. Why? Because you've seen the market reject a big level, so that's a good indication that the market wants to go lower. And you wait for the market to break, but you miss this first opportunity. The market consolidates a little bit, gives another opportunity to go short. You want to be involved in that trade. Why not? So do you see how by using support and resistance levels, you can put a whole lot of context around your current trading strategy? You don't have to trade it in isolation, but if you have an appreciation, if you have an understanding as to how they work, as to how you trade them, regardless of the type of trading system you're trading, you're going to make money. If you ignore support and resistance levels, however, then you're just kind of dooming yourself. So what level's that? 2.4029. Let's put that on our chart, see what happens. Market trends up to it. This is the lower time frame, by the way. And comes back down. Look at the way the market approaches that level and gets sold off from it. Upwards. Not meandering this sort of thing here. Don't know what's going on. It's just a straight line upwards. So, of course, when you get a reaction to that level, you want to sell it. You know, what if you traded between support and resistance levels? To have your stop up there, your entry would be somewhere here. You potentially got all of this price action here. All of this space, sorry, to be able to take your profit. You don't even have to be a very good trader if you can identify levels like this. Because that there must be like 3 to 1, 3, 4 to 1. And it happens over and over and over again. The market trades up to this level here. You get the reaction to it. You'd be selling somewhere around here when that low breaks. Stop above the high. Trade back down to the lows. Yes, you can use pivot points as well. Of course you can. No. The great thing to do with support and resistance is that if it's there, it's applicable whatever time of day that you're trading. Do I avoid Fridays? Not really. No. So does this make sense to you? Should we go over another chart and see how we identify levels on another chart? I think you get the idea of what I'm saying about the reaction to the level now, right? About the way that it should approach a level, what should happen at a level. Does that all make sense? Yeah, so let's go and identify some more levels live. Any particular pair that you want to look at, any pair you want. Targets generally, Michael, are based on other levels. So I trade from one level to the next. Pound dollar. Let's take a look at the pound dollar. Whoa, there's a lot. All right, so we'll start with the pound dollar and then I'll slowly make my way through. So for those of you that are trading the pound dollar, let's see if we agree on levels. So I think 1.5929, that's a level I should take notice of. 1.5807-ish. 1.5549. 1.5169. 1.5330. 1.4957 and 1.4564 are the immediate levels that I want to pay attention to. Round numbers you can take note of as well. So do you see what I did here? I only chose the biggest levels that have the biggest reactions. So these are levels that next time price gets to them, I'm going to be taking notice of. I start on the daily time frame, Richard. So from a pound dollar perspective, who agrees with what I put there? Are these what you already have on your charts, or are these what you would have put on them if you don't already have them? So next time price gets to those levels there, we're going to be looking for trading opportunities at them. Yeah? Okay, let's look at the euro pound was the next one, I think. So what are we looking at on the euro pound perspective? I like that. I love that level. This level down here? Yeah, I think so. That level there. These are the main levels that I'm looking at from a chart perspective. So the next area that's going to be interesting to us is this one here, 0.7224. Why? That's sort of like a pivotal point there. So markets found as support, resistance, bit of resistance, resistance again. So the market clearly takes notice of this level here. So 0.7226 is certainly a level that from a shorter term perspective, something might happen. Maybe go down to the hourlies. See what happens when price approaches this level. If it does it with momentum and then fails, we'll be looking for some sort of a sell there. Yeah, no, indeed, Pan on Fire. But you've got to look at the price action and the approaching to the level. And that's the great thing about support and resistance, is that we're looking for the reaction rather than what we feel is the case. What do we have? We had a pound Aussie request as well. So before I move on to the pound Aussie, is everybody happy with the euro pound? Anybody would do anything differently there? Let's mosey on over to the pound Aussie. Now the pound Aussie is going to be significantly more difficult. Why? Anyone? Well, slow creep is kind of been trending quite without looking back. So not really a slow creep, but more to do with the fact that we have no immediate price reference points. We've got to go back to 2008 for the last time price was trading at these levels here. Okay. But now that we've got those points in, can see how price has reacted to them. So all the way 6-7 years ago, right? These levels here that we put in. 6-7 years ago, and you can see that the market does pay attention to them. Broke through some momentum, came back to it. How could you have traded this? 1 hour time frame. You got it identified on the dailies. Pop down to the 1 hour and watch when price approaches the level. When it gets to that level, take a bounce from it. What about this one here? The market comes up to this level on the 1 hour time frame on the 7th of July. Should we go back to the 7th of July, see what that looks like? Could we have had an opportunity there? So this is the level on the 7th of July. Where are we? A little bit above, but the market comes up to that level. You've got a bearish candle there. You could have traded the rejection on that bearish candle. If you weren't happy doing it there, this then formed an intraday sort of high. So you wait for the market to next get up to it. Again, price gets rejected, get a bearish candle there. The market then breaks through the lows. You can be in here with your stop above. I use the wicks, Michael. It's all about looking for the reaction from the candles, looking for the reaction to the levels. What is it telling you? What is it saying? This quite clearly here, when the market reapproaches this level, after first seeing it for, 5, 6, 7, 8, 10 years or whatever it was. Comes up to it, doesn't like it, gets rejected. Comes up to it again, nice momentum in the candles. And then the market, double top, exactly. Market rejects it. We get a bearish candle. We then get another bearish candle that breaks the lows. On a break of those lows there, that's where I'd be looking to get in. Looking to get in there. Stop above there. Worst case scenario, you trade back towards the lows, right? You probably got yourself like a 1.3 to 1 trade. Right here. And it happens all over the chart. Over and over and over again. Now, I know that this presentation here hasn't just been based on PowerPoint slides. So for those of you that like that like the theory, I apologize. But I hope that you've got some good value out of this from going through all of the charts and seeing how you approach the levels. So once you've identified them, that's only half the battle. Once you've identified them, you then need to look at the reaction to the levels. You need to see how does price approach the level? Number one, once it's approached the level, What does it do at the level? Because we're expecting one of two things. If it's actually going to break, it's going to break out of that level with momentum. If it's going to break. If it's not, and it's just an opportunity for the big money to take some profits, maybe to trigger some stops so that they can get in on the opposite side, then that level is going to get rejected. You won't see momentum there. You will see the market close back below it. And when it closes back below the level, that is your opportunity to get in. Thank you, Sailor. Indeed, it is a logical process. And I think the problem is that with new traders or struggling traders, whatever you want to call them, traders that aren't making money, I think a lot of the problem is that they get too caught up in trying to trade a specific type of system rather than being flexible enough and taking a step back and looking at the overall market in context. Because if they were to do that, there are certain trades that they wouldn't take because it would cost them money and they would know that. And then there are other trades that ordinarily they wouldn't take, but actually they'll start to take. Trading's easy as long as you're willing to listen to what the market tells you. If you can listen, then you'll put yourself in a great position to be able to make money in the long run. I promise you of that. So, before we wrap up, we've got 3 minutes. Sorry, I've gone I'll get off of my soapbox now. Are there any quick questions that you have in the next 3 minutes that I can answer about this particular type of trading? Can we look at the dollar yen? Of course we can. So, dollar yen. We have on the daily charts, we have the following. And actually, we've got to go back to sort of like 2007-8 type time to be able to see the last time the market was at this level here. Look at that. I am not being funny, but all of these levels that we put in. So if we put these levels in here back in 2007 and we traded these levels in the present day, really? That's ridiculous, isn't it? Do you need any more proof that the market pays attention to these levels? Do you? Anybody need any more? Looking at that there? Ridiculous. Yep, tick volume you can. The problem on FX is that there isn't really true volume there. So you can use it on equities. You draw lines on all pairs and wait for levels to be touched. You have a London Open strategy. Yeah, I've got a day trading strategy. I don't really have time to go through it here, but I do indeed. Maybe next time I can go through that. Okay. We've got literally, well, we've got no minutes left, but I'm going to quickly do the CAD franc for you. Major level, major level, major level. We're looking at that. Let's zoom out a little bit more. Market hasn't been down here in a while. So I'd need to get more data on my charts, but currently, CAD franc, this is what I'll be looking out for. We're fundamentally bearish on this anyway. Okay, but they're the big levels that we'll be looking at. Yes, it will be recorded and it will be posted on FX Street and the archives. Don't have time to go through any more charts, I'm afraid. I'm really sorry about that. But we'll do this again. If you've liked it, maybe we'll do an analysis session next time. Yeah, so now that you understand how to trade these levels, next time we'll go through all of the pairs and we'll do some analysis and see what we can come up with in terms of trade ideas and stuff. Yeah? Thank you very much, Michael. Okay, so I'll say thank you very much to everybody for attending. I hope you all enjoyed it. The archive will certainly be up very, very soon. Okay. Thank you, FX Street, for having us and for putting on these great sessions as always. You guys are very, very lucky to have FX Street here doing all of this for you guys. You get opportunities to learn from many, many different people. And remember, there are so many different ways to trade. There isn't any one very, very best trade. So you should pay attention to everybody. Take a little bit from everyone, right? And then build together something that makes sense to you. So maybe you like support and resistance based on what I'm saying here. Maybe you like something else that one of the other educators at FX Street are showing you. You don't have to just stick to one person. You can kind of bring everything together, right, from all of the different webinars, all of the different things that you see to make a system that suits your personality as a trader. And that's what it's all about. Okay, so again, thank you very much for attending. And I look forward to seeing you all on our next webinar in just a few weeks' time. So take care now and speak to you all soon.